Let's start off with those reactions. It's a decent start, one would say. We've managed to climb back above that 24,900 print at least, and on our way to try and reclaim that 25k mark for the index. HDFC Bank, what is that stock up to, and where is the index getting its fillip from? Maybe it could be HDFC Bank itself, and it's a good 2.6% move on HDFC Bank, so that alone is resurrecting the index. 3% of a cut coming in on Kotak Bank, much unlike what the street was anticipating, that perhaps the stock damage on the stock would not be as much given the stark underperformance of Kotak Bank already. But no, both the NIMs have slipped on a sequential as well as year-on-year basis, and the slippage is higher than estimates. That's clearly not gone down well with the street as we speak right now. Other than that, of course, there's Tech Mahindra as well. They managed to beat expectations. Margins have come in at 9.6%. So Tech Mahindra will just come up for you on your screens. It's a decent start, about a 3.25% of an uptick coming in. There's also Tata Consumer. They've managed to miss the estimates across the domestic businesses, so look out for what that stock as well does. There's, of course, insurance companies too. Over the weekend, remember, the group of ministers have recommended a certain GST rate exemption for term plans as well as health insurance. So most of these insurance companies are going to be in focus. ICICI Lombard, of course, reacting to its earnings as well. There's JSW Steel. They're looking to acquire ThyssenKrupp Electrical Steel India for a consideration of in excess of 4,000 crore rupees. So look out for what that stock does. There's Oberoi Realty, which came out with its numbers. Margins are up about 930 basis points, and the booking value definitely is higher than estimates. So that's the other stock in focus. There's GRSE as well. They've got the LOI for a project worth about 491 crore rupees from the Defence Ministry. UCO Bank, the asset quality is looking steady as of now. Sequentially, NII uptick of about 20%. So that's the other stock which is going to be in focus. For L&T Finance, though, the earnings have been a little bit of a disappointment. The NIMs have come lower by about 30 basis points on a sequential basis, and provisioning remains elevated. For RBL Bank as well, the NIMs have come in lower by about 63 basis points actually. And slippages have seen an uptick of 43% on a sequential basis. RBL Bank getting slammed out of shape this morning. 9.5% of a downtick is what you're seeing on this one. India Mart, the headline numbers have seen an improvement. So look out for what that stock as well does. 10% lower right now as we speak. Because clearly the collections are still under pressure for them. For MCX, it's a bit of a mixed bag though. Margin is improved, but it's below estimates. So let's see what MCX as well is doing. So India Mart, along with RBL Bank, of course, are your clear disappointments. HDFC Bank supporting the index right now. Kunal, what are the first trades that you're punching in?
Yeah, I think sticking to the banking index, and ICICI Bank is something which is looking attractive. The stock bouncing off from its 50-day moving average on over the last 4-5 days of this price correction stabilization. So would look out for ICICI Bank.
All right, ICICI Bank it is. Let's find out what Naresh makes of the start of the market open this morning. And Naresh, how are you reading into the first trades, and what's the trade that you're punching in this morning?
So good market breadth to start with. Looking at Dr. Reddy's, that could break out about 6,800. So looks positive for a breakout play going forward.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.